The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We'll start out the show like we usually do, showing you the DAX. Of course, it's had some type of a sale with the rest of the world as they worry about what's going on with the trade agreements or non-trade agreements. The next one we want to look at, of course, is the FTSE. It's actually acting a little bit better. It bounced a little bit this morning, and we'll see if that's any good. Folks, if you'll remember, 2 weeks ago, we had our good friend Stan Harley on of the Stan Harley Market Letter, and he talked to us about the 619 potential low in the market, and you'll never guess what today is. It's one day after the Fibonacci day. The Fibonacci day is 618, and here we are at 619, and Stan said this should be a pretty significant low, followed by a rally into July. Whether that's going to be the case or not, we'll have to wait and see. I'm trying to get Stan on either Friday or early next week. Remember, on Thursday, we're going to have a very special guest, Dennis Gartman of the Gartman Letter. One of the more famous of the letters out in the financial world will be our guest, and he'll be talking to us about gold, the stock market, oil, and the bonds. Anyway, we'll move on here to talk just a little bit about history, and we want to go back a little bit in the history books just to see things that happened many years ago, because there's nothing new under the sun. There really isn't. And what we want to do is to try to find something that, what I've tried to do now is to get a place where I can find these charts real easy, and I think I've found it. I don't want to say it too soon, but let's wait and see. Here's the Dow Jones Industrial going back to 2000 when we had the dot-com bubble. I would like for you to notice that the Dow Jones topped in January of 2000. The NASDAQ didn't top until 3 months later, March the 24th. Actually, the 23rd, because that was the 24th was the money show in San Francisco, and that's when the NASDAQ went above 5,000. I think it was around 5,200, 5,100 or something at that time, and they had the big money show. And boy, that was an incredible experience because these people were walking around carrying their equity runs, comparing them how much money they'd make. It was just no joke, folks. You saw greed at its finest. I had 350 people in the room, and I was trying to show them the patterns that were there that were so bearish. I mean, it was just, it was about like it is now. Anyway, let's take a look at that time. It was very bearish, and what I did was they wouldn't listen to me. They kept talking, and that's the worst thing when you're speaking, someone talking in the audience, because it just takes your thought away. So I got up on the table. And the guys that were with me couldn't believe what I was doing, but I got up on the table and I started stomping my feet. I know a few of you were there. I know Tony's in the room and he was there, but I started stomping my room and I said, people, there's a 200-mile-an-hour train coming through this tunnel with whistles and lights blazing, and you're not listening. Pay attention. And then I went through my 45-minute speech and I showed them all the patterns and how bearish it was. And went on. One person out of that whole group called me up a week later. My recommendation to them was, if you're in the NASDAQ, if it closes lower this coming week, which was the 24th of March, that would have been the week ending in the 30th. I said, if it closes lower that week, just exit your positions and wait a little bit. And if it goes back above that high, you could buy them back. But that would, at least way you would protect yourself. So about 2 weeks later, I got a call from a very nice lady up in San Francisco, told me she enjoyed it. And she thought it was very interesting and that it started to work. And I said, well, did you do it? And she said, oh, no. She said, I'm just going to sit through the correction. But I thought you had a very interesting program. Well, it dropped 85% from the high, folks. So I don't know what's going to happen. But just remember, there's nothing new under the sun. So pay attention to some of these charts because they really mean something. Bob was there too. I don't know if you were there when I got up on the table, but it was rather quite funny. Anyway, we're seeing a lot of divergences. We talked about that, a lot because of, what we're seeing in, the rest of the market. Because we have a two-tier market, just like we did back then, folks. If you'll notice here, this is the New York Stock Exchange Index, which is the real market. It just completed that big Gartley last Monday, and now, we're starting to come down the first couple of days of this week. But you'll notice you had the same type of a move where the market just kept going straight up. And it was not really the market because that's the NASDAQ 100. That can be done with about 15 or 20 stocks, folks. That is not the big market. So keep that in mind as you're looking at this. Also, if you remember last week and again this week, I focused on the big 8 stocks, the ones that are in the news all the time, Google, Amazon, Apple. And these stocks have very bearish long-term patterns. 3 drive to a top patterns, butterfly patterns. I mean, they're all there. I mean, every single one of them. And the only one that's actually been violated by just a couple of dollars, was Amazon, and that turned around yesterday and today. So I don't know if that's just one day off or not, but we'll see. But I believe that we should have a little bit of a bounce here. We're at some pretty good support. Yesterday, we had a real interesting situation in the, I'll just put this up from yesterday because I wanted to show the action of what happened yesterday because I think we can learn something from this. At least I always do. Yeah, David White is telling us that 6 stocks in the NASDAQ are 58% of the index of the 100. I didn't even know it was that high. Wow. That is real. Just 6 stocks out of 100. Shut the front door and raise the rent. Anyway, this is the 3 drive pattern that we were looking at. And it looked like, it had a bottom, and we had a really good bottom. We rallied all the way up to 2781 in the S&P, and it held that level, extremely well. And then that's the key that we want to be watching. But look what happened yesterday in the NASDAQ when we were doing this rally. Look at the NASDAQ. The NASDAQ rallied 80 handles all the way up to 72.80, and that was a perfect 61% retracement from the high. That completed the head and shoulders pattern. As you can see, the left shoulder is higher than the right shoulder, which means it's bearish. It's right at the 61% retracement. So this was, and now what we've done is we've had a huge break, and I believe we came down and didn't quite make that D point, but I have to double check that. I don't know if we got as low as 71.65 in the NASDAQ last night. I haven't checked that yet, but I certainly will. I'll check it right now. And yes, we did. We hit 71.66, so we completed that one too. So that's going to be a real interesting one, especially when it's coming in at the time of the cycle low that Stan Harley's looking at, because that completes that big ABCD, at a really important spot. So kind of keep an eye on that today, folks, especially, if you're following the trend, you can certainly, see if these markets, because when they change, oh boy, that they can have one heck of a rally as you see here. I want to discuss one other thing about this S&P yesterday, because after the rally, I just wanted to show you, oh, well, too late. We got the thing coming up. I'll come right back, and I will try to pick up where we left off with this S&P. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and the next chart I wanted to talk to you about is this S&P chart. You'll notice that we had that 3 drive to a bottom pattern at that 2754 yesterday. From that level, we rallied all the way up to 2780.25. That was exactly 3/4 of a point from the exact number at 2781, and from there down we went. And once we broke through that, really important level, you'll notice where we stopped. Of course, I just posted that one too, that we went, maybe I didn't. Let's just do it. Make sure that we did it here. Hold on here. I want to make sure I did. I think it's number 5. Oh, please tell me I did it. Oh, I got all this stuff ready, and don't tell me I messed it up. Shut the front door and raise the rent. Oh, dear. Not a good sign. Don't ever give an Italian a job with a computer. Okay, anyway, we went right down to that 61% retracement and also the 50% retracement of the low. So we should be pretty close to a bottom. Well, whether that's going to be the case or not, remains to be seen. We've got another market that's under a great deal of stress that we were expecting to have some problems, and that's the gold market. The gold market has really been moving relatively quickly to the downside here. I believe we're heading to the 2200 level, 1220 level in the gold without too much trouble, but we'll have to wait and see. Here's what we were looking at overnight. We were trying to see if we could get a $11 rally in this, but we only got up to 1287, and now we've broken down to 1272. This is not a very good sign for the gold market. And of course, when we hit that level last week at 1314, that was a really strong sign that we couldn't get above those levels. And that was at the time when we were looking at the silver making a huge double top, which has happened. So I think we've got a good move coming into gold and silver, but right now I still think we're heading down at least, well, 1220 is the 61% retracement on this, so we'll see. If the cycles are correct, from low to high, we'd be looking at sometime around the middle of July to see the move occur that way. But the problem is that it's coming down so fast, this thing could be skewed, and you might either accelerate to the downside, or you could be looking at something that would make it a little bit more tempting on the downside, maybe even as low as 1,200. I don't believe we're going to get below $1,200 an ounce in gold, but we certainly could. And believe me, folks, if we get below $1,200 an ounce, you could be looking at gold in triple digits, because we could easily go below 1,000. Because you know, it's a very short move between 1190 and 1030, which was that old low from 2016 December, which was that huge three-drive pattern that we were fortunate enough to get on to see what's you know, to see that move up. But we'll have to wait and see how this one ends up. I'm not sure what's going to happen with it, but at least we're getting pretty close, you know, to seeing something that is very interesting. Now, I wanted to bring to your point, to your attention, a couple of things here. One of them is, let's just take a look what's going on in these grains, because this is where the real news is coming in to hurt the folks quite a bit. But you'll notice here in the soybeans, we've gone from 1060, where we were on Memorial Day, when the weather was really hot and the weather cooled off a bit, and then tariffs came in. You can see they dropped at $1.60 a bushel. Folks, let me give you an example of what this means here. You know, the average farm is 432 acres, and you know, the average yield on the soybeans is roughly $52 a bushel. So you multiply that, $52 a bushel times your price at like 1060, that gives him a crop of pretty close to 200 grand. Well, if he didn't hedge and he has to sell it now, he's lost over $40,000. That's profit. I mean, he's still going to make money at 908, but not like he would be if he had hedged his crop. So that's why they do that. The yields on the corn are even greater, because you get 176 bushels per acre on corn. But again, it was trading at 420. Well, 420 from 370 is $50 a bushel, you know, multiplied by, you know, a lot of acres. You're getting hit pretty hard if you're not hedged. And that's why, you know, Sim only, you know, does the business that he does, is he has this all laid out for the farmers on a computerized basis, saying, do you want to take that risk? And some of them do. They take part of they hedge not all of their crop, but most of it, and that's what they do. But they're big boys. They know what it's like. So, but that's how, you know, when they go up, they make a lot more money. When it goes down, they don't make as much. That's the bottom line. But there's got to be a point down here where there's going to be a pretty good bottom here in the grains. Now we're at a real critical level right now. We're at a 1.618 expansion of the whole year's range from January through May. That 1.618 comes in there at 909. We're trading at, last price I saw was 908.5. We're also at a 1.27 expansion of the August low of last year. That also comes in at that 909 level. So I wouldn't buy here. What I would do is I would wait to see if a bottom came in and then buy the first pullback. That would be the safer trade than instead of trying to catch this falling knife. And believe me, you better use a stop in the overnight markets also, because when the news comes out, these markets, they react you know, quite violently. But this is the definition of an oversold market, folks. There's no question about that. That's the main thing. Now, Norm Winsky has just informed us that June 18th, yesterday, was a Neptune retrograde that should mean something. So we're one day off of that. Maybe that's going to be a bottom in the stock market and possibly even in these grain markets. But we'll have to let the market tell us that. We'll wait and see what's going on. Now, if we take a look at the December corn, this is the new corn. If you look at this, you'll see here that we're almost at the same situation. We're at the 1.618 of the move from March, and we're also at a 1.27 expansion of the yearly low that was down there at 380. Now we're trading at around 370, 369. So that's another one that is ready for a bounce. And we're down 3 weeks now. So we're very oversold under any stretch of the, very oversold. And all of these funds are certainly, you know, dumped all this stuff. So the market is poised for one heck of a rally. Now, if you'll notice that notation that I had up there, if you'll notice where it says hold off by any buy orders in December corn, the reason for that is, folks, the market gapped down, and it gapped down through that 20-man line that was there, and it had a really bad close that day, being down about 10 cents. That was a sign that something really serious was happening in this corn market. And as you can see, the seriousness has continued, but we should be nearing the end right in here somewhere because of these expansion numbers. And the news keeps coming out, so you can't stand in front of it, but there should be some pretty strong support. at 366 in that Christmas corn. I don't know where it's trading right now, but there ought to be some pretty good support, setting right at that level. So that's what we're watching here in some of these grains, but it's best to wait a day, let them rally, pull back. Believe me, they got this thing so oversold that the bulls are scared to death. So anytime the market rallies and then comes back a little bit, they're going to be panicking, and then you could buy it back at a little bit cheaper price where you could buy corn here at 366 and risk a dime if you wanted to be a farmer. But with the news the way it is, I prefer to wait. And so that's, okay, 368 was the low of the day. Thank you very much, Marshall. So 366 is held so far. So if you buy 366, put a 4-cent stop. Be a farmer for $200. 877-927-6648. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we'll move on to the next one. I wanted to talk just a little bit about that copper market, folks, because we've had a really huge break here in copper, and that was one of the things that looked like it was going to be really important to watch. If you'll take a look at this chart here of copper that we posted in the newsletter this past week, because we mentioned that if we got above that 331 level, that had a possibility of going up, but if it didn't, you're making a major double top at that 1.618 expansion. Folks, we're trading at 304 in copper right now. We're down 27 cents in a week and a half. This is not good because we're breaking below all the support. Everybody that's bought this stuff since in the last 2 months is pretty much underwater. So a little bit below this, below $3 an ounce, $3 a pound in copper, you're going to be looking at something closer to 265 would be my guess. Now, a lot of these people are talking about what this is going on about this tariff stuff, folks. It's hard to tell because we haven't been in a trade war. I personally don't remember one. I remember the Russian grain robbery, but I really don't understand. I believe that these people have and what I'm talking about, I mean the administration, they probably think through this pretty clearly, and they're doing something to squeeze China, and I believe it's about intellectual property rights with the stuff that they take from us in software and, taking products, you see made in China. But anyway, let's move on to the next one. I don't really know what it means. Just follow the charts. That's what's going to, they can't hide from you. If they're buying, prices are going to go up. If they're selling, prices are going to go down. You have to be able to see what's going on. I don't even know what the last price in copper is, Mr. Z. Could you let me know? I thought I saw 303 today, but I wasn't even sure. Maybe it was 305. I'm not sure, but I saw it come across, but I knew it was down quite a bit. I think the key to that whole metals market was the silver, because we made that massive double top at the 78% level, and gold not rallying at all. I mean, that was really sad, because we had that beautiful bottom coming in back on when it hit 1285, and for 3 weeks, all it can do is rally $30. Hello. I mean, that's not how gold operates. It's usually out of there by 60 or 70 bucks an ounce when it hits a major bottom. So gold looks like it's heading towards that 1220 level is what it looks like, from that particular scenario. The hogs are still holding up incredibly well. That's the only one that hasn't broke very much. And cotton is broken. We're down now more than 10 cents. We're trading down below that 385 level in the cotton now, after making that big double top up. Well, yeah, it was not a double top, a butterfly top up in there. So we're below that old high that we had back there at 87. So that's a sign that this is a major top. So whether that's going to occur or not will remain to see. This was a market that was really related to the weather, because it had more problems than some of the others, but it's selling off with the rest of them. I don't know if cotton's involved in the tariffs. I know that corn and soybeans certainly are, but cotton certainly has come off 10 cents, but I'm not sure whether cotton, it must be, because they're probably going to just nail all the agricultural products, and we'll see what's going on. But it's they could come out tomorrow and fix the whole thing, but you never know. And the key sentence there is never, because they do things a whole lot differently over in that area. As regarding the crude oil, if you'll remember, we were looking at a market that was going to have a pretty good sell-off. We're looking for the market to get down here to 62.70. Yesterday, we had a really nice point to rally in the crude oil. It just did an absolute beautiful 61% retracement right up to the 66 level. And, it just stopped right at that, almost spot on to that 20-minute line. And now we're trading about $1 a barrel under that. So if you sold that one, put your stop at the break-even point, because you've got the Federal Reserve. What am I talking about? You've got the OPEC people out there, giving their 2 cents worth of what they're going to do. And, and I don't believe any of them. I mean, how do you calculate what these guys are pumping out there? What they pump and what they say they pump is probably a whole lot different. That's the way I would view that. So I don't know. I can remember the days when crude oil was $2 a barrel, folks. That went way back into the 60s. But I remember in California, Arm & Hammer was the man who put Aramco together and, made the Saudi Arabian oil available everywhere in the world. But That was a long time ago. My goodness, when I look back and see how many things I've done in all these years, I said, wow, how did I live this long? Someone asked me a question last night via email. What was the craziest thing that I ever did during all of my stuff in trading and everything else? And I really, yeah, it's been a great run, Mr. Z, right? There's a couple of them. Well, never mind. Let's move on to some of the other things. You get bored hearing this stuff, so I don't want to get into it too much. Let's talk just a tiny little bit about the sugar market here, folks, because I think that sugar's had a pretty good run. We're backing off now to this level here. You'll be able to see this level here. That 1150 was the rebuy. We were in October. Sugar did a really good move, and it backed off perfectly. And now you're at a break even on that, so you don't want to lose anything in that, because sugar's not involved in the tariff, because we do make some sugar here, but a very little amount compared to the rest of the things. So don't make any distinction between sugar here and sugar coming from Cuba or other places, because it's totally different. That's one of the things that you want to watch. Regarding the euro, folks, the euro is the dollar index has really started to rear its head. We're getting above those old highs by quite a bit now, and which we were expecting it to do. So we'll see how it's going. I haven't got any book. What are you talking about? No more books for me, Marshall. I might do an autobiography sometime in the future, but it'll probably be an audio book. I don't want to do any more books. I'm getting to the point where, I just like to, work a little bit during the day, and I don't want to do a whole lot of work. I used to do the books because I thought I had a lot of information to give out, but about everything that I've done, that's about it. I don't have anything new, and I've never kept anything secret from anybody. That's one of the things I've always tried to share, because most of the stuff I've gotten from somebody else. About the only thing that I can remember is, calling the Gartley, because no one really understood what that was. And then the butterfly pattern, and that was basically, Bryce Gilmore pointing out the same things that my daughters tried to point out when they were 7 years old. So that's mainly the main thing. People. All right, I'll tell you what I think is the craziest thing. I asked my daughters last night, what do you think was the craziest thing I ever did? And they knew the answer to that, and I'll share it with you when we get back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, craziest thing I ever did, based on what my daughter told me, and that was back in 1993. We had a very dear family friend who had a daughter that was diagnosed with terminal cancer. She had about 3 months to live. A very lovely girl, and we were very close to the family. He was a truck driver, just a really nice guy that we knew really well. We went out to dinner with him quite a bit. His wife was a teacher there at Cal Poly, and Patty had a very short time to live, and she had a fantasy, and her fantasy was she wanted to relive the Pretty Woman scenario where she got to go to see the opera, ride in the limo, and ride in the plane, and do the whole bit. And so we were sitting there in the trading room, and Chuck Hubbard, who was the father-in-law of Robin Ventura, who's the manager of the Chicago White Sox. Robin was one of the Golden Glove. He'll be in the. I'm sure he'll be in the Hall of Fame someday. But his father-in-law was Chuck Hubbard, and Chuck owned 4 or 5 dealerships there for car dealerships. And he said, "Well, I'll give her a new car." And so, of course, she would return the car when she passed away, which she did. But the problem was they couldn't get tickets to La Boheme because she wanted to sit in the box like they did with Richard Gere and Julia Roberts. And so Byron happened to be there, and Byron said, "I can do that, I think." So he called his buddy in New York, who was a member of the Met and had all that, and told him the story. They got the 2 tickets. We flew the girls back to New York. She didn't have a boyfriend. She took her BFF. And so we gave them two days in New York with the stayed at the Marriott Marquis. They had a limo, took them everywhere they wanted to go. They got to go to La Boheme, and it was really quite spectacular. So that's probably the and I was only it didn't cost me. We all paid. There were 4 of us that chipped in that took the whole thing. It was like $4,500 for the whole thing, but it was really fun. And the problem was the doggone press got a hold of it and made a little bit too big a deal of the thing than what it was. Let's move on to the markets because that's what you guys are here for. There's other crazy things, but that's probably one of the more unusual things. Anyway, let's take a look here at this Japanese yen, because what's going on here with this tariffs has happened, it's hit the yen quite a bit. We moved down into that 109 level again, and I believe we're heading down. All of these currencies, folks, have had, really big moves, and especially the euro. That euro dropping 300 pips in one day, and all we could do was rally 100 pips. And now we're getting ready to break out of the low side again. So this tells us that these currencies still have more to go to the downside, especially that Australian dollar. That Australian dollar got hit, really big after making that Gartley pattern. And that's another one that, it looks like it's got a lot more to go on the downside. If you just take a look at it here, we'll bring it up. You'll be able to see it here that it's heading down towards that old lows way back from last year, down around that 73 level. And it's not going to be very long before we get there, it looks like, because it's starting to accelerate. That US dollar is getting very strong, and that also hurts the farmers because that means that it costs more for people to buy our grains because the fact US dollar is strong, they have to convert it into US dollars, and that also is a double whammy. This is going to have some pretty dramatic election consequences because a lot of these farmers, they base everything on how much they're making, and if they get hurt any more than they've already been hurt, they're not going to like that, and that probably means that the votes are going to change. So this could be something, but it could change by tomorrow. It could change by noon today. All this could be all over, and of course then you'd see a monster rally. But the market will start to rally before you get the news. I can almost bet. You saw the market was coming down before we got the news, but the same thing will happen on the upside. It'll start on the way up before we even guess anywhere of where we're going to be. So let's remind ourselves that that's pretty much what we want to do is trade what you see, not what you think. That's the old adage that we try to go through here. Those of you that follow the emerging markets, we talked about that a little bit yesterday. I haven't updated this yet, but they're getting smoked. All of them are really getting smoked. In fact, I got a special heads up yesterday. I don't trade this market, but we have some friends in Hong Kong that do. And you'll notice here that this Hang Seng Index, we had this trend line that was there, and we were coming down. We were below the 78% level, and the market gapped below that line. It hit it right on the line. It gapped at 30,100 and immediately broke 250 or 300 points. And last I saw, it was still going down. And you can see where the price objective is on this one. It's all the way down another 10% at 27,500. So, and that's what our price objective on the S&P is. It comes in around 24. I think 2,400, I believe, on the S&P. Now, whether this is going to be a bottoming day or not, well, we've had a pretty good rally since I started talking. The Nasdaq's rallied 35 points, so that's a pretty good thing. So we'll see if that's going to make any difference. Now, the Treasury bonds got up to that level we were looking at yesterday to sell, which is that 144.14 level. We got as high as 144.20. I really wanted to get just a tiny bit higher to the 786, but we did make that, and we're now trading at the 144. Let's get this one up here because let's see if I learned anything from these charts that I've been doing just to be able to get them up here a little better. There it is. Hold on, we'll be able to see it. This might be a good system, so I don't know. Anyway, we got up there, and now we're trading down back to that 144 level again. So this is going to be another interesting one that is going to be pretty exciting to watch. But this is a possibility of a bottom day. And the reason for that is we've hit some major support levels, as we've shown you in the S&P 500 and also in the Nasdaq. And the other thing is that it's also a Stan Harley day, and Stan has been incredibly accurate, on his timing days. And he gave us this 2.5 weeks ago when he was on last, and this is June 19th. So let's pay close attention to it because it'll be interesting. The grains are still. We're still making new lows. We just made new lows again in the November bean, so they're below that key level at 908. So again, I wouldn't touch that until I saw a move up above 22 or 23, and then buy the pullback or something like that. That way, you can quantify. Well, you can always quantify your loss because you can put the stop in. But I don't like buying below the numbers. If I got a number at 908, I want to buy at 908, and I'll put a stop on it. But if I'd have bought at 908, I would be using about an 8-cent stop on this because this stuff is going down faster than well, I'm not going to say. Anyway, the opening topping patterns of large stock. Tucker's asked me, so the topping patterns on the larger stocks seem to be ignored or overridden. It's a market of stocks, Tucker. And you can have stocks that do this. And I just showed you the ones that are in the news all the time, the Google, the Apple, Amazon, Microsoft, and those are all making, I showed them twice. I don't want to show them again because they were all making butterflies or ABCD or 3 drives to a top pattern, every single one of them. And this is what happened in 2000. We had the same thing. Only with 2000, it was .com. Everything was going nuts. Those of you that were trading in 2000, and earnings would come out, earnings would be up 3%, and the stock would open 150% higher. And some of these things, that's how crazy it was. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
The chart of Christmas corn, December corn, that's the new crop corn that's growing right now. And you'll see that we are trading at $3.66 a bushel. That's a 1.618 expansion of that last move up, and it's a 1.27 expansion of the whole yearly range. So there it is at 366. The way I would do this is I wouldn't buy it right here at 366. I would wait to see how well it holds 366. If it stays this way for an hour or so or more, you know that there's somebody that is coming in buying it. But if it gets anywhere below 364.5, that's only $75 from where we are now. I wouldn't touch it. So that's what I would do. And if you wanted to hold it, the only way you would hold it is if the market would rally 4 or 5 cents on the day and maybe get unchanged on the day of the December corn, then you might have something that you could put in your purse and cash in it a little bit later. But that's the way I would handle it now. Just at these real critical levels, and I believe in these numbers. That's what I'm going to be doing, but I'm not buying it yet. I want to wait to see how well it holds the 366. Wouldn't even mind paying up for it if it starts to move above 369 or something. I'd give that extra 3 cents back just to be safe enough to say that this might be it. So then I can quantify what my risk is, because I don't know what's going to happen from here. I do know two things. One is people are going to continue to eat, that's for sure. And the second thing is this market is very oversold. And when it does rally, it's really going to rally. And whether it's going to do it today, tomorrow, the next day, I don't know. But I want to wait to make sure that that's where am I buying silver? $15.20 an ounce is what I'm shooting for, Mr. Z. That's that long-term pattern. That's where I hope we get the gold down to that 1220 level. I won't be buying silver. I don't like to trade silver as much. I own silver, but I don't like to trade it because it's too illiquid for my purposes. But I would be watching 1520 to 1510. That's the big 78% on the long-term weekly charts in silver. That has been the outstanding target. So live every day in an attitude of gratitude, and may God bless, and thank you for listening. Thank you, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!